Sir, everything is sorted now.
What sorted?
So I have my own portfolio.
Okay.
Penny stocks out of the house. And also diversified portfolio.
Okay, but all of these are Indian stocks, right?
Of course. Sir, India is a growing country.
Yeah.
Do you have any idea the amount of money that is coming inside the country? India is the answer, sir. I'll invest here.
अच्छा एक बात बताना, what phone do you have and what laptop do you use?
So I have Apple iPhone, I use Windows laptop.
Probably use a Chrome browser, probably use Amazon to order.
Haan.
All these companies are not based in India.
I know.
They're companies abroad and they have different returns. So the point is, a lot of people make this mistake of only investing in their own country. It's actually called a home bias. In fact, in 1991, there was a paper which talked about investors that only looked at their own country to invest. Now, I'm not saying don't invest in India. India is a fantastic place to invest. But if you're investing, maybe in this episode, we should explore what home bias is and should you have some exposure abroad. But do you think there's some problem here?
Correct. Basically, I don't have enough money. Plus, those companies are too big. And plus, they're already developed.
Actually, my friend said the same thing and you are saying, you're probably thinking the same thing too. All of this is not true. So in this episode, we'll bust all these myths. Let's start with myth number 1. Okay, so here, let's go back in time, because we always go back in time, to 1992. Now check out this roller coaster of the market. The Sensex went from this 2,000 something points to 4,500 points. That is what? 274%.
Oh, if I would have invested 1 lakh rupees at that moment.
Got it. But after that, the 4,500 went to this number which is below 2,500. Imagine, how would that make you feel?
Just a second back, I was calculating, it went to
So
zero.
that's quite a roller coaster, right? And this is beyond your control. You can't do anything because this is when the scam of Harshad Mehta was happening in the market. You can't do anything about it, but you would have felt certain emotions. So that's a crazy roller coaster, isn't it?
I know, but sir, I have multiple roller coasters. See, if this happened, I have FDs to save my money. I have golds, I have REITs. I mean, that's what he taught me, right?
In all these episodes, which you should check out. Totally right. Which you're saying is that you're diversified.
Yes.
So even if this happens, there'll be some cushion. Interestingly, I also thought exactly the same way until I went to Turkey with Swati, where I met someone interesting who was from Argentina. Now in Argentina, these people get their salary and then as soon as they get their salary, they run out and buy all the groceries they can, all the clothes they can, whatever they want that same day so that they don't have to spend anything the next day. Do you know why?
Why?
Put it in the comments if you can guess. Because they have hyperinflation. I think last time I checked, their inflation was this much, which meant their value of that salary literally loses by the hour or by the day. So they have to spend everything, otherwise it's a financial loss to hold cash.
But that happened in Argentina. Do you think that's going to happen everywhere?
No. But geopolitical risk is something you cannot predict. My point is very simple. Hyperinflation has happened in many countries many times. Who knows what India will go through in the short term over the next 40 years or 50 years. Look at this chart over here. You'll see Hungary, Yugoslavia, Zimbabwe went through hyperinflation. Now, it's possible India never goes through that. But why put yourself in that risk? An investor's job is to reduce risk. And it's not only geopolitical. It could be COVID, it could be social, it could be any number of things that we don't have control on. What we can do is try to diversify just a little bit more. Imagine at these times, people would go with a wheelbarrow, have cash on it, walk down the street to a supermarket and
get groceries.
To buy one loaf of bread.
Oh, they're taking multiple loaf in that.
No, just one loaf. Because hyperinflation.
Price is very high.
That's right.
Correct. Got it. But sir, she did everything right. This is no escape then.
No, she did everything right. She did diversify, but it was all within her own country. So I personally think at some point in your life, maybe not now, you should consider having some exposure to stocks abroad. Dude, at the start, you had created a bunch of problems. Why don't we go myth-wise?
Yes, correct. So I don't know about documentation. I don't know how to invest. I don't know how to analyze the companies in a developed country. I want to invest in a growing.
You also said those companies and countries are too large, so why invest only?
Correct. Plus, I don't have enough money.
Dude, I think you have a lot of information and there are a bunch of myths over here. So let's break them and start with myth number 1. The first myth is that my country will generate the most returns.
Of course.
So you think India is the best?
Correct.
And it is. It's growing really fast.
Yes.
And it is. It's growing really well and the respect is improving. Yes, it is. So therefore, it must be the best place to invest.
Yes, of course. So I need to grow my money. I'll obviously find out growing countries where I can invest my money.
Wrong. So over here, check this out. This is the last 10 years from 2010 to 2020. So it's a 10-year period. And in this 10-year period, we can see the returns for all these countries. So India is definitely in the top 3 with 9% CAGR, which is amazing. But are you surprised to see that a developed country like US is actually not bad? You would imagine that the US or Japan is large and therefore their growth is smaller, right? Right? It may not be the case. Actually, you'll see that the large companies become even larger. Think about the large companies in India 10 years ago. They're larger in India also today, right?
There's no limit of getting large.
I think that's how compounding works. You shouldn't think that there is a limit. What does that even mean, right? Could you even think that there'll be a company worth $1 trillion in the world? Apple is.
Yeah.
And India is almost 3 trillion something. Isn't that crazy?
3 apples.
Imagine if someone told you this a few years ago, that aisa ho sakta hai, you wouldn't believe it, right?
Correct.
Another question over here is, logically speaking, India is what? 3.8% of the world's market cap. So is there a reason for you to put 100% of your money in equity in India? Should you have 1 to 3% somewhere abroad as well? I am also trying to understand this well, but understand the bias. You may not want to invest abroad, that's fine. But understand the bias that we have.
So it's easy for you to say, maybe people like you can invest, but I can't afford to buy a $200, $300 per share wala company. I don't have enough money unless you give me.
Okay, cool. So that brings us to myth number 2. Only the ultra rich can actually invest in these markets abroad. So actually that's not true. There are a lot of wealthy Indians, yes, which are investing abroad. Correct. One way, for example, is to use a mutual fund in India, which gives exposure abroad. So if I had to make a checklist out of this, I would probably say 1, use an authorized platform which can actually do this. Second, think about the amount that you want to invest. Don't use it as a bank account. Don't leave money there. You transfer, you buy the stocks, and that's it. Third, if you don't have enough time and context to research, which most of us don't, including me, I don't have the time to do the research, think about getting into, say, some kind of an index fund or a mutual fund in India, which is giving some exposure abroad. That's one way to do it, so you're not thinking. And also, I would say, until you don't have a good Indian portfolio, because my bias still exists that India is a fantastic place to be, I would say have your equity position in India completely done, and then maybe a few percentage points can be allocated abroad if you think this makes sense. And if you do consider to invest abroad, maybe US is the place to start with. Which brings me to my next myth. And you had said this, and I know you were also thinking this. Large developed economies make you invest.
Correct.
A mature economy has already found its 10x, 100x winners.
Correct.
So there are no opportunities.
Correct.
A mature economy grows slowly, so the stock market will be dull and boring.
Correct.
A growing economy will have all these opportunities. In fact, India is where everyone's going to.
Correct.
Therefore, a developed economy like US will have 2 or 3% returns, and it's not worth our time. This is not true. Let me show you some data.
Yes.
So look at this. The first column here is year, and so is this column. This is the GDP growth rate of USA and India. Let's compare 3 numbers here. 2%, 6%, minus 2.7%. This is the GDP growth of US. And if I look at India, it's 7 plus 9 minus 5.8, which is fine. That was the COVID event. But look at India's growth rate. It's phenomenally better than US. Talia.
Because it's true, yes.
But let's look at the returns of US Dow Jones average and returns of Nifty. So you look at this, minus 8 plus 4, plus 18 plus 24, plus 7 plus 14, plus 22 plus 12. Oh, America actually beat us in that particular year. Minus 5 plus 3, plus 25, plus 28. It's not that
Comparatively
bad.
higher, yes.
It's, I mean,
Sort of equal.
Sort of, it's not that bad. I'm not saying US is better, but I'm saying it's not that bad. US stock market returns are surprising once you actually see it. But remember, this was Dow Jones. Dow Jones has these old transportation companies and all. The new age tech companies like say Apple, Netflix, Nvidia, etc. They're all in
Nasdaq.
Good job. So you can see Nasdaq, and I'll just read the returns. From 2013 onwards, 13.4%, 5%, 7%, 28%, -3, +35, +43, +21, -33. It's sort of like the creme de la creme of tech, which is growing, serving the world in one index called the Nasdaq. So does it feel like you should ignore it?
Sir, I'll put all my money in Nasdaq right now.
No. Wait, hold up. I'm not saying you should invest abroad. Don't do that. All I'm saying is that this bias exists, and you should know that there are opportunities outside of India as well. So when you have some extra cash, when you feel that your India portfolio is working well and you're stable, emergency fund, all that is good,
Sorted.
then you can think, okay, one more place to diversify is probably abroad.
Sir, opening a Demat account in India is easy.
Plug.
Now you want me to open up abroad.
I know it may sound
I
like...
have to go through a lot of documentation again. I'm sure compliance hoga. I'm sure taxes bhi honge. No, I don't know how this works.
So you're totally right. Opening an account abroad is not easy, but it's become easier through the liberalized remittance scheme. Other than that, there are some platforms which just make it easy for you to buy it online. So just make sure you don't buy it from an app or a website which is fraudulent and fake, like a lot of the Forex apps out there. We should probably do an episode on that. Tell me if you want to. Put it in the comments. So that's what you can do, but there's one more advantage.
What's that?
Here's a quiz for you. When was the last time you saw the rupee INR rate? What was that rate? I've seen 45.
You're old.
But the point is, this going from 45 to 83, someone has profited, right? And why this happens is because India is primarily an export-driven economy. We export textiles, we export chemicals, we export IT services. So this rupee will continue to depreciate. It will keep going higher and higher. If your money is in dollars, you're actually benefiting from that rise. Do you think of that?
No.
So if Nasdaq didn't move at all, you still profit somewhat from that appreciation of the dollar.
Oh.
Interesting, right? So that's also an interesting thing over here. So the dollar is going to continue to appreciate, at least as far as we know so far.
Perfect, I got it. So I would agree on one thing. I definitely had home bias.
Okay.
To be honest, yeah. But yes, I would consider investing abroad maybe sometime later, just not right now.
That's fair. What do you think? Did you have home bias as well? Did you learn anything new? It's really important for us to understand whether the psychology series we're running is actually helping you and Abhishek
Yes, it is.
or not. Please write something large, long in the comments and tell us whether we did good or bad.
And don't forget to subscribe and like.
Others, his KRA is, subscribe.
Incentive.
Nice. Thank you so much. See you in the next episode. कुछ सिखाए तो था पिछले महीने क्या कर रहे हो
क्या?
यादव जी अंकित जी क्या डेट पे नहीं है बोल ना
देख क्यों रहे हो सर ऐसे?
तेरे देख ही जा रहा है देख ही
ऐसे तो नहीं था सर.
ऐसे कर
ये ओके.
let's find out.